Alright, so here we are. We got another one to deliver on the Spotlight series. This will be number 2. If you followed me before and saw NWPX, that thing was to the moon, really. So if you got in on that one, you should be feeling pretty good about yourself. Today we're going to move into the next one here, and here we go. So like always, my little disclaimer here: trading stocks is risky. You will lose money. All the information contained within is my opinion only. I encourage you to do your own research. So we're looking at ticker CCB, which is Coastal Financial Corporation. All right. So what do? They're a Coastal Financial Corporation. Is a bank holding company headquartered in Everett, Washington. Operates wholly through its wholly owned subsidiary, Coastal Community Bank. And then what I found when I was looking through there, is that they were able to offer same type of financial services that you would get at any real banking installation. So that's what they're doing. All right, their last close was at 41.54, which is it's not bad there. And then we move on. I pulled some data from Stock Rover here just to kind of pull out some information for you. You can see they have them as a strong buy. Their 12-month target price is going to be $63. If it gets there, that'd be awesome. I won't hold it that long. I'll probably do a little swing trading in between if I can. The profitability looks pretty good. They're better than their industry, but not quite up to par with the S&P. Gross margin looks okay. And all that really means for their gross margin is, pull up my cheat sheet on the other screen here. Gross margin is the total sales revenues minus cost of goods sold. So it's not negative, so it's good. Operating margin, I was reading on that a little bit. That's the company's operating income as a percentage of net sales. The higher the margin, the better. So this is 51%. It's pretty good. Net margin there is the company's net income as a percentage of sales. The higher the percentage, the more money the company earns per dollar on sales. So a little bit less than the industry, but higher than the S&P. ROIC is return on invested capital, so it shows you how well a company generates cash flow relative to the capital it has invested in its business. It is defined as the net operating profit after taxes divided by the total equity plus long-term debt and capital lease obligation plus short-term debt capital loss. So this little formula here, it tells you how they calculate it. That looks to be okay. And then we move down into, I like to see how they get scored versus their peers here. So overall rating versus peers, 73, 4 stars, better than average, not perfect. Growth rating is really high, 5 stars, 98, so they're growing faster than the peers. Valuation, not very good. They're low value compared to the peers. And their efficiency rating versus their peers, better than average. Financial strength is about average, and the momentum is better than average. And then there were no significant warnings when I looked at this one. So then let's move right along here. All right, moving into chart analysis. Okay. All right. So here we are, CCB. Turn on the pattern. Patterns are on. Okay. So here's what we're kind of looking at. So this is what I'm thinking. All right. So I already got the GAN fans drawn. We can see got my overlays on the fans to kind of pop them out to me a little bit. It is above the Ichimoku cloud back here, so that just indicates a positive momentum, which I like to look for. It was kind of trading sideways until about 2 trading sessions ago. It sort of popped up here. We had a Harmony bearish indicator, and then right following that we had a long upper shadow, which indicates that the sellers took control. Then as you can see, it popped back up. So what I'm looking at though is I go back to my GAN fans, and I can see that it's been riding this upper trend here. When it hit this intersection, it weakened. It tried to come back, and it came back. It tried to pop through and then weaken down. So then on the 9th was really the test. What was it going to do? Was it going to continue to ride this down or pop through? And what it looked like to me is it's popped through. So again, I like to look for 2 indicators that's respecting a line, and then on the 3rd day, if it follows that trend, I'll buy in. So here I have 1. So it came up and it hit this line, and it kind of stopped here. I think maybe popped through a little bit, came back down. Day 2, it popped up past this line. So then tomorrow, when it opens, if it opens above this line, I'm gonna buy in. And then we could probably just look and see where I might want to put my stops at. So we'll say I buy in. It opens here. We'll just say I buy in here. See how it goes. The first thing I'll do is I'll come back and I'll look at these stops. So I'm probably, if I go to here, like I said, I'm looking at 3 green bars. That's only 4%, which is very realistic that it'd probably hit that 4% in a day or 2. But I'm thinking I want a little bit more than that. So I'm going to look here in this general area. Looks to be like some good resistance here. So I'm going to come down to here, and I'm going to hit that. So it gives me my 3. So I hit these 2, and then this one, that'll give me 3 green bars. That'll be 7%. And if I wanted to just go off the back side of that, then that's what it will look like. So here's what it would look like for my gain, which isn't too far off of what it might do. I'd have to think about that just a little bit. I have to think about it. Do I want to do the 7%, or would I be happy enough with almost about 4% here? The more I think about it, just kind of the way that the fans are right now, what I might be interested in doing is set it like this. There's 4%. Alright, let it ride up, hit that, sell. Probably when it hits this area, it's probably going to hit some resistance here. So be interested to see what it does. So I would sell just before it hits this resistance line up here, and then just kind of see what happens. Either it's going to bounce back and go higher, or fall further down. So that's probably what I would do right there. Not get too greedy and go for that 7%. Even though we thought about it, right? We thought about hitting that 7. But I think the better answer would be this. So that's kind of how I'm going to play this one. I'd be interested to hear your thoughts on what you might want to do. But hope you have luck in all your trades. Till next time.